to be here for the TTI educational series, the next installment in that plan. I know that title that's on your screen is a little nuts. It actually is an allusion to one of my all-time favorite billboards for, I think it was LA Fitness, put up a billboard with a big ugly alien looking thing on it, and it said, when they come, they'll eat the fat ones first. And I guess the fat people lobby caused them to take the billboard down. They found it offensive. But anyway, I always thought it was funny. So I have tapped into that theme for this presentation, which is really about how do high income individuals who are not retired, who are still dependent on their income and their labor, how do you prepare yourself for the potential for jobs to be wiped out and some sort of universal basic income that does not allow you to maintain your same quality of life or lifestyle, as it were. So with that, we're going to go ahead and jump right in. I'm going to turn off my camera so you guys can see the full presentation there, and rock and roll. So the first thing is, and this is kind of my theme for today, is to make sure everybody understands that more likely than not, you're going to lose your job or your income, depending upon what your situation is, to an AI robot in the near future. I've done an enormous amount of research on this topic, talked to a lot of people, listened to a lot of podcasts and recordings and videos and so forth, and it appears to be the case that virtually every job is going to be wiped out by AI robots. And we'll talk about that a little more during the presentation. The other goal of tonight's talk is to kind of get you thinking, make sure you've thought through all the different possibilities and what the various likelihoods are. But we're going to go through some of the expert forecasts. What are the experts saying, and what are the institutions saying about what's going to happen to jobs and professional employment? We're going to talk about different scenarios of how this could go down, right? There's chances that society collapses. There's chances that we end up with very high unemployment before government can replace people's incomes, and you end up with some sort of revolution. But we'll talk through some of those. We're going to talk about who is exposed and why it is that lawyers like me and doctors and consultants and engineers, highly paid professionals, carry the greatest risk of losing their job and their income. And last, where's capital going to move? How are you going to maintain income when you can't go down to the law firm and bill your clients by the hour because a robot's doing it, or you can't go be an architect and design a building because that's all being done by computers now? And so we'll talk about that as well. So let's talk about the process and kind of what's happening and where we're going. And if you haven't figured it out, this acceleration has already started. Go Google the company Block. A few days ago, they announced that they were cutting 40% of their workforce due to AI. And it's not just that headline that's interesting, it's the detail behind it. And what the company said was, hey, listen, we figured out that over the next couple years, we could phase out 40% of our people. And we could keep them around for a little while, let them continue working for the company and, quote, phase them out over time. But we decided to go ahead and, I guess on behalf of the employees, rip the Band-Aid off and terminate them immediately. And those jobs, that productivity, that work is being replaced by AI, right? And so that's just one example of one company. This is going to happen more and more. And where I see the slippery slope starting to like fall out from underneath our feet is when companies like Tesla start mass deploying AI robots, where you combine the computer being able to engage in tasks with a physical body that can move around. It can go to your client's office. It can go down to the courthouse and argue your case for you. It can take the plans down to the county to have them approved. You know, once it can move around, it opens up additional jobs that that it can replace that maybe a desktop computer or a laptop cannot. And so when those robots start coming out powered by AI, that's when I think there's going to be sort of massive unemployment because jobs will literally just be phased out. I'm an actively practicing attorney. Not only do I handle litigation for my clients, but I also negotiate contracts and so forth. I have a huge number of friends who are attorneys, many of whom I've spoken to, some of whom are on this call. And we are very, very close to not needing a human being to be your attorney. There are some gaps in the work. It's the easy stuff I do that hasn't been replaced, like taking my document, going and logging into the system and filing it with the court. Well, there's not an app that'll do that for you now, but that's kind of the least helpful thing or least advanced thing that I do. Many things still have to be served through regular mail. Somebody's got to go take that to the mail. Now, I typically don't do that, but somebody in my office does, and those things have not yet been replaced. However, I have clients that are bringing me matters now where they'll bring me a 10-page report, detailed report that's been created by ChatGPT that has all the background on the parties, what the claims are. Here are some possible claims that need to be evaluated. And I am obviously able to take it from there and handle it using human labor, but I also could take that information, put it into ChatGPT, and because I know what to ask, how to ask it, how to frame it, those sorts of things, I can generate a better response. But it feels to me like we're literally months away from the ChatGPT system knowing what I know and how to do it. If y'all have used ChatGPT at all, you know that when you ask it to do something, hey, give me a report on AI acceleration, it'll give the report and the information that you asked for, and then at the bottom it'll say something like, now if you want, I can ABCD. And what I'm seeing as I'm using ChatGPT in my law practice, it's getting better and better at suggesting the next thing. And I hate it, by the way, when it suggests something and I say, yes, please do that, because that's just, it's evidence that it's getting closer to the human thought process and how an attorney goes through stuff, or when I'm working on a marketing project, how a marketing person goes through stuff. The thing to keep in mind is that, let's say that you are in the business of building some sort of AI bot or AI engine that can replace other jobs. Which jobs are you going to target first? The answer is the high dollar ones, right? Those of us that are doctors, those of us that are lawyers, that are engineers, we're paid big money for our experience, our intellect, our decision making, our thought process, and many times just for the base experience. Hey, I've already seen that problem come up. I know what the answer is likely to be. I know what a jury's likely to do. I know how your body's likely to react to that implant. I know what we have to watch out for as we watch this cancer over the next 6 months, because I've seen it happen, and I've been surprised before when it popped up in the pancreas, but now I know to check the pancreas or to check a particular level in your blood because I've seen it so many times. And to be honest, AI is not there yet, but it's very, very close, and it's rapidly advancing. So make sure you realize this, that AI is coming for your job. I don't care what your job is. If you paint houses for a living, there's going to be a robot that's going to take over painting houses. If you manage, if you're a, what's the name of the job? I think it's lease operator, the guy that goes from oil and gas well to oil and gas well, making sure everything's okay, reading the gauges and the meters and recording that information now on a tablet, which is then wirelessly sent back to the home office. All that can be done with not even a Tesla robot, but literally a Tesla self-driving automobile that just goes from place to place, connects by Wi-Fi to the gauges, reports the information. So I don't care if your job is surgeon, Those jobs are already being reduced by robots who are performing surgery. It's only going to get more. If you're a lawyer, if you're an accountant, if you're an engineer, any of those type jobs, and God forbid you're a consultant, you know, that job already is almost fully replaceable. You can ask any question that you've been asking McKinsey or PricewaterhouseCoopers, and you get almost as good an answer, if not a better answer, from the AI systems. But let's talk about what the experts are saying about all this. McKinsey has done a number of studies, and by the way, you guys should be Googling all these things. You should be asking ChatGPT, tell me what's going on with AI and jobs. Make sure you stay educated about this transition and how it's going. But McKinsey has recently estimated that 60 to 70% of work activities currently performed by humans, including knowledge work, can be replaced by AI. Now, what's fascinating about this is when you hear headlines in the paper or on TV, they typically talk in terms of your job's going to be replaced. And even I have said that today and in the title of the presentation and in the emails. But that's not necessarily true, because what is certainly almost 100% likely is that some enormous percentage of the work you are doing will be replaced by AI. So this McKinsey study doesn't talk about in terms of 60% of the jobs will be replaced. It's that 60% of your work will be replaced. Now, what does that mean? Well, first of all, some of the experts have predicted, when we talk about what is the transition, what does it look like, right now we have sort of on average a 40-hour work week. Some of you older folks like me remember back when everybody just worked 40 hours a week at the office, and if you were a professional, you worked maybe 80 hours a week, weekends and late nights and all that. Then we went through this phase where a lot of companies implemented 980, where you still worked 80 hours every 2 weeks, but you only worked 9 days. So you worked, you know, whatever, almost 9 hours a day, 9 days every 2 weeks, and you got every other Friday off. And people would say, oh, it's my 980 day, I'm not in tomorrow. Well, what a lot of experts are saying is that we're going to go to a 30-hour work week, and then a 20-hour work week, and then a 10-hour work week, on the theory that the average person across all jobs can produce the same amount of work as it used to do in 40 hours with only 10 hours at work, quote unquote, because of being able to use AI tools and such. So that is a big part of this transition. And remember that, because we're going to talk a little bit about where we should be investing. And one of the big themes I think that's going to be successful is taking advantage of Americans having more leisure time. If you only had to work 10 hours or 20 hours a week going forward and got your same income, would you and your family travel more? Would you go do experiences and tours and attractions more often if you had more time? Would you play more golf? Would you go fishing more? Stuff like that. And the answer, of course, is yes. I know a lot of people, particularly women, who would say, oh my gosh, I would go shopping twice as much, right? So the point being, think about these things and think about what can I invest in to take advantage of that. Goldman says that potentially 300 million jobs globally could be lost to automation, particularly white collar roles, because of the cognitive abilities of AI. And when you put that in a robot, literally any job can be replaced, right? Cutting hair, dentist, performing surgery, any of those things can be replaced. And so, you know, again, the guys that are building this stuff are going to target those high dollar jobs, because of course I'll pay $100,000 for a year to lease a robot that replaces an $800,000 a year doctor, right? I think that number 300 million is crazy low. The only way I could get to a number anywhere close to that low is if we talk in terms of there's a period of time where new jobs are created and we truly lose a billion jobs, but we gain back new types of jobs, or some are transitional, etc. MIT, these two guys, Autor and Thompson, are two of the leaders, generally accepted experts on AI changes and so forth. They think that what will happen is workflows will be changed, demand for professional roles will decline, and will compress the headcount and the wages. Because by the way, if you're a lawyer 10 years ago, you can demand a very high salary because there's lots of demand and lots of jobs. As AI takes over, even say 60% of that, all of a sudden we don't need as many lawyers. So now salaries come down for the ones that are still working, or for the hours that you're still working. Because why would I pay you $1,500 an hour to negotiate my contract when the AI system can do that for pennies on the dollar, right? And so that's a very sophisticated evaluation of it. The way I see this, and I'm certainly not an expert, but I have paid a lot of attention to what other people have said. I feel like this is going to feel very methodical, moderated, slow, calculated process. And it's like a boulder rolling down a hill. It's going to start speeding up a little bit, and then it's going to feel a little bit uncomfortable, and then it's going to be a runaway landslide, avalanche, whatever you want to call it, quicksand, if you will, where the ground falls out from underneath our feet, and all of a sudden, almost overnight, the rest of the jobs disappear. And that's one of my fears and concerns. And what drove me to say, hey, our audience needs to hear this presentation, so you're aware that that could happen, that I think there's a significant likelihood that something like that happens. And if so, what are we all going to do about it? Because remember, ever since I was 15 years old or something, I guess, how far back I started paying attention to these things, I was told, prepare to retire around age 65, put money in your 401k, save money, etc. And then hopefully you'll have money to draw down against to live on, augmented by whatever annual return you can get on your money. Well, a couple things. Number one is I got older, my lifestyle started getting more elevated, which required a higher amount of annual cash flow, if you will, to keep me at the lifestyle I want to lead. And of course, I'm also providing that lifestyle for my family. And so I am not, as we sit here today, I'm not comfortable that I've put away enough money that if I tomorrow stopped being able to generate income, that my cash flowing assets would provide me that same level of lifestyle. And obviously, if I were at that point, at the level I want to be, I wouldn't be working anymore, right? And so what the sum total of these things means is that we all have to be very careful, and we have to be prepared to retire a lot faster, and we have to think better about where are our assets going to be invested when the AI revolution has occurred and we're in a quote post-work world where people aren't working, they have more free time, and the government is frankly subsidizing people. Again, having done a lot of research, we can kind of narrow the possibilities down into 4 general scenarios. Now, there's obviously kind of gray lines in between these. One of them is what they call an AI co-pilot economy, where humans evolve, jobs slowly but surely change, but people who are high performers, the best lawyers, the best doctors, the best engineers, the best consultants, the best architects, etc., the best hairdressers, still retain some leverage, still are able to maintain a career, in some cases at the same economic level, and the transition is, we'll call it smooth. Another scenario is that AI starts replacing entire professions very quickly. Massive job displacement occurs across high-income fields. Income from expertise, like lawyers, doctors, etc., collapses faster than the people can reposition. And this is kind of it's the bad scenario for those of us that are highly paid professionals, but it's not expanding into society. In other words, we're not talking about some sort of societal collapse. We're talking about the high income segment of society suffering badly because, number one, they've lost their income, and number two, they're not prepared for that at the time it happens. Number three is what we call the post-work economy, and this is you'll hear Elon Musk and Sam Altman talk about this a lot, that the goal is for AI and robots to do all the work, and I mean all the work, and for the government to provide the traditional phrase has been universal basic income, or UBI, which is sort of a socialist idea of let's tax the wealthy and then pay a minimum income to everybody, and everybody lives like they're in East Germany during the 1980s or 70s. But of course, Elon Musk and Sam Altman want to paint a rosier picture, so they're trying to change it to UBHI, Universal Basic High Income, based on the idea, it's not far-fetched to be honest, the idea that the equipment, the machines can be so efficient and produce and transport and make available goods and services at such a low price that everybody can lift their standard of living, including wealthy folks, just based on that universal basic high income. Now, I'm not betting on this, number one. And what I think is very likely is that if that is the destination and you make the assumption that we are going to reach it, my bet is that that transition is going to be very rocky. So I am personally, in my own personal life, I am very well aware of what it might look like if there's a challenge getting from here to there, and I'm investing and buying things to prepare for those sorts of situations. I don't know if there's going to be a shortage of food because all the people who grow the food and transport the food go on strike because they're not being paid, or the dollars they're being paid aren't worth what they used to be, or the robots break down, or there's some other problem. So I'm paying attention to those sorts of things. And of course, that's the scenario 4, which is social disruption. What would happen if over the course of a 12-month period, the United States went from where we are now to a 60% unemployment rate? That's very scary, right? There's going to be a lot of people looking at the folks who have money in the bank, living in their big houses without bars or walls or guns, and say, you know what, why does that guy have so much food? I'm going to go get it. And this is a real possibility, because the first thing that has to happen is that the robots and the AI have to take over our jobs. Then they have to create value, or proceeds, if you will, and then the government's got to agree on how to distribute those proceeds. And if we know anything, we know that our government, any government, is very inefficient at quickly solving problems because somebody's going to disagree. And then there's a time lag between that and when they actually distribute cash. And so all of us on this call, and those of you listening to the recording, we need to be prepared and be thinking about all 4 of these scenarios, because we don't know which one's going to happen, and we need to be prepared for all of them. I think I've covered this already, but it's important that you realize, yes, you too, your job is likely to be replaced in a very rapid period, 2 years, 3 years from today. And I don't care if you're doing complex brain surgery or reading radiographs or negotiating multi-billion-dollar transactions. I promise you the AI systems can probably already replace you, and it's just a matter of time before the companies that build those systems develop specific tools to replace your job. And so I hope you leave this presentation realizing you can't hide behind, put your head in the sand, oh no, I'm safe. If you haven't seen it, go look up what Elon Musk said about robots. Number one, being surgeons, and 3 years from today, there being more Tesla robots performing surgery than there are doctors on Earth today. And the notion that if you imagine the most talented heart surgeon in Chicago, Illinois, the AI robot that starts performing surgery in Tanzania is more talented than that guy in Chicago, because he has all the benefit of that guy's experience and skill times 10 million, because he's got the benefit of all surgeons' experience, knowledge, and skill. And so it's a real issue. I'll bet you that if you tweaked ChatGPT a little bit, by the end of tomorrow, you could have it working as a lawyer who's better than me. It has a voice. It can talk. It can make a legal argument to the court. It can make a legal argument to the jury. And so it's only because no one's kind of finished going through and creating that that it hasn't happened already. But very soon, those systems will be able to replace not only surgeons, but the best surgeons and the best lawyers and the best accountants, on and on and on. And yeah, there'll be a transition period. I'll be there next to the robot AI lawyer, giving him tips and, oh, no, don't do it that way, do it this way. But that doesn't last very long. It will learn very, very quickly, and very quickly it won't need me anymore. Before I get into the actual investments that we're making, that we're going to move towards, make sure you've thought about the math. Most of us at some point have done that kind of retirement analysis. If I put this much in my 401k, if it goes up this amount per year, I should be able to retire at my standard of living by age, make up a number, 60, 65, 70, whatever it is you want to do. I don't care how old you are, if you're 35 years old and you're a highly paid lawyer, you do not have 30 years left to save up money. You got to do it quickly. And as this slide shows, 5 years at 150,000 bucks will only get you about $1 million. And if you can only earn 7% per year cash flow on that, your lifestyle is going to take a big setback, right? And so, number one, you need to find ways to invest in assets and investments that will appreciate faster than 7% a year. Number two, you need to invest as much cash as you can get your hands on. Number three, if you're behind in this process, I know some of you guys, I see names who are in the call. I know some of you are already retired, quasi-retired, or entrepreneurs, and you have a business that will continue generating income. You got to piece all those things together. But if you're behind in the process, you need to talk about how can I catch up? And one of the big answers there is going to be things like pre-IPO deals, early stage deals, where you can get sort of more bang for your investment buck, and you may need to take some more risk making bigger bets in order to get caught up before this AI landslide comes. But think about the math, be aware of these situations and how they affect you. All right, most of y'all probably have been waiting to hear this part. Where should I be investing? First of all, a piece of this needs to be publicly traded stocks, and I know Ticker Tape doesn't talk about that much, but we're going to give you some specific names and some sectors today. Oil and gas, I'm told, is a key area, and in the last 10 years, both Ticker Tape and Tom Schmidt have, I guess I would say, neglected this sector. But the short way to say it is we have not invested enough of our capital in oil and gas and energy related deals. The reason these are valuable, number one, is in the meantime, you get tax benefits. Number two, they likely will pay significant cash flow, higher than, say, a multifamily property over time. And then also all the experts say this is one of the things that can't be replaced. All the talk about wind and solar and space-based data centers and all these things, we're going to need an enormous amount of oil and gas over the next few decades. And the expectation is that prices will not stay at the $60, $70 level. And so as a hedge against future shortages and greater energy demand and a great way to get cash flow, we think oil and gas is a great place to be. Recreation and entertainment, this is the theme we talked about. People likely to have more free time. What are they going to want? They're going to want experiences, right? They're going to want to go out and do things. They're going to want to travel, all that sort of thing. And then what I'll call my safety area, healthcare and housing. I thought about this. You guys probably know that Ticker Tape has invested in a bunch of freestanding emergency rooms. At the end of the day, if the doctor becomes a robot, that emergency room is still making money, right? Because you still have people breaking their leg who need treatment. Doesn't matter if a human or a robot is. In fact, if we have robots, then we're not paying as much for doctors, and therefore technically the owner of the emergency room makes more profit. The profit margins go up. Same thing with housing, whether it's retirement homes, multifamily. Look for businesses that cannot be replaced by AI. Let's talk publicly traded stocks. What we've done is we've looked at the sectors that we think are important, and then we tried to pick a winner from each sector. These are our top 5. The first one is digital realty, because of course global data center infrastructure is where it's going to be. Now the problem with that is it's very difficult for an investor today to know which companies are going to be successful. Is it going to be Amazon? Is it going to be Google? Is it going to be Oracle? Is it going to be digital realty? And so if you're not investing in 30 different companies there, you probably are, it's going to be difficult to find the winner. And of course, if you invest in 30 companies, you're investing in some of the losers, right? Because there won't be 30 winners. So it's a very difficult thing to accomplish. So we are going to be watching over the next 5 years who's beginning to be the winner. It may switch from DLR to Amazon or AWS, or maybe our SpaceX investment that we just made ends up giving us more than enough access to this industry because they start building them all in space. But you want to own that infrastructure, because in the next 20 years, 10 years, the expectation is those companies will become a lot more valuable. Second area is energy. This one was frankly a tough call between Exxon and NextEra. And what we decided was NextEra is a little more diversified, number one. And number two, we don't know necessarily that oil and gas is going to win. What we know is that electricity is going to win. And NextEra is a very diversified electricity company. They have some nuclear, they have solar and wind, and they provide electricity to lots of players. If you didn't watch it, you should go watch the replay, or at least the announcements from Trump's roundtable today, where he's got 7 major corporations that have agreed to create their own energy generation, electricity generation for their data centers, and to provide the excess electricity to the grid, to the rest of us. And stuff like that, if Trump, Trump's not going to be able to do very much in the 3 years or so he has left. But if government keeps doing things like that to greatly expand energy generation, then it's going to be harder. You're not going to make as much profit, for instance, with NextEra. But we think this is, as the landscape looks today, this is an area you need to be invested in. CrowdStrike, obviously, the more digital the universe becomes, the more cybersecurity becomes important. We're impressed with this company as a leader in the space. Marriott, lots of travel-related companies you could invest in. I don't necessarily have a strong belief that Marriott is the best hotel chain or to invest in. But what I know is that it is a travel company which also has a massive real estate portfolio, right? So one of the things that AI cannot replace is land. So instead of like an Expedia or a Booking.com, we felt that investing in something like a Marriott made more sense because of that real estate component. Last is Tesla. Obviously, they expect to be the leader in autonomous vehicles and robots. They have their own AI chips. They have enormous amounts of data from every Tesla that's ever driven on a road. And so they are at the heart of everything we're talking about. And so it seems like a no-brainer to invest in Tesla at this point. Drop down a tier, here are some other ideas. Certainly Booking.com is a great travel play and a wonderful company. Their stock, if you look at its historic performance, has been phenomenal. TripAdvisor, if you don't know this company, they also own Viator.com. They bought it a few years back. They're focused on tours and attractions, right? Those experiences that we all like. My bet is that people, you and me and everyone else, is going to engage in more experiences once we have more free time. That points directly at things like TripAdvisor, the cruise lines, Disney, companies that provide either those experiences directly or a way to get access to them like TripAdvisor. And then of course, NVIDIA, every indication is that there is nobody anywhere on the horizon who is able to challenge NVIDIA. The closest challenge to them is that some of these larger companies are starting to, quote, build their own chips. But don't you know that if Apple or Amazon or Tesla or SpaceX came up with a chip that was truly better than NVIDIA, they would be selling it to all the other companies in the universe and giving NVIDIA a run for their money. So my theory for now is that NVIDIA is where you want to be if you want to invest in the hardware. So notice that most of these publicly traded stocks that I've talked about are in areas where it's very hard to pick a privately held winner, right? There is no corollary to Disney that's a privately held company. So we're forced to go to the public markets for these types of investments. However, as you know, Ticker Tape's invested in lots of individual hotels. We will continue to do so. In fact, we're going to more aggressively look for single hotel limited partnership investments for the cash flow and the expectation that as leisure time increases and work time decreases, every hotel in the world should see a slight bump in revenue. And so we can capture that if we invest in the right property in the right place. I talked about oil and gas. I'm not going to belabor this one. Look for oil and gas limited partnerships. If you've been investing in these and you have a partner that you think is fantastic, bring them to Ticker Tape, because we're actively looking for groups that are doing oil and gas investments, primarily exploration and production, because we want that sort of bigger upside. We're trying to increase our earnings quickly and generate cash flow quickly. But we're also going to be looking at royalty deals, buying royalty streams for the cash flow, et cetera. The keywords on this slide are high cash flow potential, right? This is not a 7 or 8% multifamily deal. This potentially can get you a higher return on your cash. And remember, that's what we're talking about. When my income goes away, it doesn't do me any good if I have $3 million worth of stock. I need cash flow where I own the asset. It not only provides cash flow that keeps me happy for the rest of my life, but then when I pass, it goes on to my kids, because they'll be sitting there trying to figure out what they're going to do for a living in a post-work world. And in order for them to maintain their lifestyle, we need to have assets that I'm not drawing down. In other words, I can't just sell 100 Marriott shares every month to live on. I got to have the dividends and the cash flow to help provide for my long-term lifestyle. Now, remember, I can buy those stocks today and sell them 2 years from now, take the cash and do what? Invest it in multifamily properties, emergency rooms, oil and gas investments, et cetera. I don't need the cash flow necessarily today. I need to increase my principal very quickly in a year or two so that I can then invest in cash flow assets like oil and gas. I have invested in a few vacation rental deals in the past. I kind of got burned out on it when the industry started having some problems. It is now my #1 sort of target sector. I believe this is where we can make a lot of money. Again, like buying stock in Marriott, if I buy a house in Gulf Shores, Alabama, and rent it out for cash flow and pay some management company to manage it, not only do I have the cash flow, I also own the real estate. And so if everything else goes badly, owning land in a disrupted economic environment historically has given the owners of the land more options, the opportunity for wealth, etc. Worst comes to worst, I convert my vacation rental into a long-term rental and have tenants stay there, and 3 families can stay in my 3-bedroom condo in Gulf Shores, Alabama. If people aren't able to pay for vacations, there will always be a need for housing. Or, God forbid, one of the ticker tape partners who invests in a deal loses their home for some reason. They build a nuclear power plant next door or something, or a data center. We have another property that someone can go live in. And so this seems to me to be a great area to, number one, invest capital, number 2, generate cash flow, and number 3, be a pretty good hedge against some of this stuff that can happen in a post-work economy. Real estate, we've done a lot of multifamily real estate investing. We've done very well with it. To be honest, our returns have always been higher than what everyone else seems to get in multifamily deals. We've never lost money in a multifamily deal. You heard me knock on wood. But they have it's never generated enough of a return to get us excited. You know, for instance, the one we have in St. Louis last fall, they refinanced the property and we got 80%, I think it was, of our money back. And with the dividends we've received so far, it's pretty close to 100% of our money back. It may be over, but it's in that ballpark. Well, that's fantastic, right? Now I own the same interest in the same property, but I have all my money out, right? That's great. That's not going to maintain my lifestyle when I lose my law career because robots are doing all the legal work and I'm trying to replace that high income. I'd have to invest in a lot of multifamily properties to create that kind of. However, if you make the assumption that everyone is going to move up a few rungs on the socioeconomic level ladder, as AI makes business more productive and more efficient, you can invest in higher end properties, Class A properties, let's call them, based on today's value, and theoretically the rent should go up significantly as more demand develops for those Class A properties. And it seems like, you know, that may be a bet. It's a bet on something happening in the future that we don't really know is going to happen. However, the risk seems very low. Worst came to worst, I'm going to get a cash on cash return from that investment. And real estate has ups and downs, but over the long term, it tends to appreciate in value. And so this seems like a great area for us to continue investing in and perhaps increase investments to prepare for the AI revolution. Of course, freestanding healthcare facilities, again, it doesn't matter if it's a human or a robot that's in there talking. I want to invest in more things like memory care, retirement communities, emergency rooms, facilities that will always be needed, and I don't really care whether robots operate them or not. RV parks is a new one I'm looking at. If people have more leisure time and they have income, do more people buy RVs and sort of live in them, basically, right? Like, I've always thought in terms of, I've never owned an RV, but I've always thought about, you know, you have the RV, it's parked in front of your house. And whatever your vacation time is, maybe you get 2 weeks a year, maybe you get a month a year. During that 2 weeks or that month, you hop in the RV and you drive to El Paso or what's it called, Carlsbad Caverns, New Mexico. You spend a week or two and you come home. Well, if you don't, the reason you come home is to go back to work. If you don't have to go back to work, maybe you just get the RV and you live in it for 2 years and you travel all around the country up into Nova Scotia and down to Mexico and everything else because you can. And if that were to happen with more people, all of a sudden RV parks become a great place to invest. Anybody who has experience investing in RV parks, we'd love to hear your experience, who you invested with, how it turned out. But we're in the process of kind of doing that, that research now. So that's what we're looking at. Of course, we'll continue to make the same investments we've been making. We've got a round of Kraken open. We'll be doing more pre-IPO deals in the coming months, but we're going to start shifting a lot of the focus to these AI leveraged investment opportunities. Bottom line, right now, if you're like me and you're living on the money that you're earning from your quote day job, be aware that that day job could disappear faster than you planned, and start working on converting your income into ownership that's going to generate passive cash flow, so that if for whatever reason you lose your employment sooner than expected, you're not left hanging and scrambling and trying to figure out how to maintain your lifestyle. Because my guess is that when Congress votes to decide how much quote universal basic income Tom Schmidt gets, it will not be enough to allow me to continue the lifestyle that I lead right now. And so make sure that you've thought about these things. You've looked at areas that are likely to be successful in that post-AI world, and you already have a strong plan for how your income stream is going to turn into a passive-based income stream. I am going to talk about the open deals that we have now. So standard disclaimer, this is not an offer to sell securities, and we do not provide investment advice or legal advice. You should get your own advisors. We currently have 3 pre-IPO deals open, sort of 2.5, I would say. Utility Rescue Billbots has a convertible note deal that yields 8%. We're about to raise the price of that conversion. So if you are interested in that, you've got about a little more than 3 weeks to get your investment in to take advantage of the current price. Kraken is a very exciting cryptocurrency trading platform. Its competitor is Coinbase, and Kraken has filed for their IPO this year. Big news came out today about Kraken. If you didn't see it, they were approved by the Federal Reserve, and they're the first cryptocurrency company to be able to participate in the United States federal banking system. Very big tailwind for the valuation of that business. I'm guessing that was one of the things they were waiting on approval before they go forward with their IPO. Ticker Tape, you may know, may have been part of it, already invested in 1 round of Kraken. We're about to buy another block of shares. So if you're interested in that one, reach out to Rita ASAP. You probably have about 40 days, I'm going to guess, before that deal closes. And then we just completed our 5th round of SpaceX at a $1 trillion valuation, which is crazy cool. The expectation is that in 3 months, that one's going to go public at 1.75 trillion. We've had some people shuffling around. I think we may actually have some SpaceX shares left. So if you're interested in that, reach out to Rita. If we don't have any, we're already looking for another block, so we'll put you on the waiting list for the next round of that. We also have 2 funds that are open. TTI Debt is currently returning 12% per year. TTI Metaverse is a crypto, blockchain, and metaverse real estate fund. A lot of people think this is a great investment opportunity if AI is going to take over, because everything will move more digital. Cryptocurrency and blockchain will become that much more important. And so if you believe that, we have an opportunity to take advantage of that. And then for those of you that attended this, I'll give you advance notice. We're going to re-energize the Ticker Tape 2 fund. I know some of you are already in it, but we're going to make a handful of investments in that fund during the rest of this year. So if you're interested in a earlier stage, I'll call it. It used to be early stage. Now we'll just call it earlier stage. Fund approach from Ticker Tape with no management fees, let us know, because we're going to be reopening that very quickly. feel free, reach out to us, and we'd love to talk to you about all kinds of stuff from tax strategies to estate planning, trust, business questions, investment opportunities, etc. You can find information about all of those different things on our website, tickertapeinvestments.com, or just reach out to Rita. You can get her at 832-459-7335 or Rita at ttifund.com. I usually recommend texting her. That seems to be the best way to get a response and make sure that you get your questions answered quickly. If you want SpaceX, text her today, because I'm not even 100% sure there's any left, but there may be a little bit. And obviously, if there's anything else you want to talk about, reach out to us and we'd be happy to holler back. With that, everybody have a great rest of your week and weekend, and we'll see you on the next call. If you want a copy of this slide deck or the recording, let us know and we can send that over to you as well. Thanks, everybody. Have a good one.